Hello, everybody. This is Socrates and Tyler doing our daily vlogs, except on Saturday. We even snuck one in on Sunday. I just noticed that we can go up to 8 hours. So if you guys are ready, we might run a long one here. Uh, just kidding. We'll try to keep it 30, 45 minutes, but there's an awful lot to talk about. Yesterday was interesting for us because last night the title was do we have a bottom in Bitcoin? The answer now is yes, at least a temporary one. We'll take a look at that. We said, have we got a top in the gold market? The answer is yes, and it dropped today, but we'll take a look at that. And what was going on with the stock market? The answer is it had a pretty good day today, which makes like 5 or 6 in a row, and it's beginning to look pretty interesting. So um, what we will do now is, first of all, I think we might have lost Socrates. He's been having a little bit of problems with his network.
And
So
I am still here. I just put it on screen share to show your face because for some reason it was only showing me while you were talking. So I put it on screen share so that some people could see that it was you that was talking there. So
that's the last thing in the world they want to see is me. But thank you for doing that. What we are going to start with is we're going to do this in reverse order today. We're going to start with the gold market because it's kind of the dog of the group. It's been very strong, but we've been talking about it running into some problems up at that 1340 to 1360 level, and we both feel that it's got to get above that. And I feel like it's going to struggle, but it's looking almost fully bullish to me at this point, according to Consensio. We'll look at some charts, but it backed off again today. That's only, it wasn't that big of a move, except in silver was down about 2%. So what I will do is I'm going to go to screen share and pull up some gold charts. And
I can see that.
Great. This is the Dow Jones Industrials. We'll get back to that in just a moment. And we will go right to the XAUs. And that is not it. The XAUs are right there. Okay. So here's what we talked about yesterday. We talked about the fact, good news, we broke through the setup trend line last week on a closing basis. One check for the bulls. Two is we've got a fully bullish consensio with the long term moving up, the intermediate term moving up, and the short term moving up, and prices below all of them until today. Now, this is only a 1 day week so far, but not only have we dropped back below the setup trend line, which doesn't matter, it's already broken through it, but we also have, as of right now, dropped below the short-term moving average, which is still moving up, but it won't be there for long if we stay down at this level. Gold is down $12, just a little less than 1%. So on this longer term chart that we looked at yesterday, we've got a lot of overhead resistance. As was pointed out by Socrates, we've got a lot of support. We've got higher lows and higher lows, and we've got a horizontal trend line going back 5 years that has been restraining price. So I am not reading too much into the fact that we are struggling a little bit here in terms of where we are on the on the TD system, the Tom DeMark system, is we've got a green 3. It has not yet gone above the green 2, and now we've got a red candle, but there's no way this is going to be a price flip. We've got to go all the way down here to get a price flip. So basically speaking, from my perspective, on a long-term basis, this is still very bullish, and I expect a break up above this 1380. This is a 1360 line. I really want it up here at 1380 because I'd like to take out these wicks, but I see no reason that that's not about to happen. Having said that, I am not buying gold at this point. And the reason I'm not is because of this overhead resistance. When you've had something on a weekly basis turn down the price 1, 2, 3, 4, 5, 6, 7, I'll give it an 8, 9, 10, 11, 12, 13, 14 times, and even a 15 and a 16 if we cheat a little bit. Something that happens 16 times in a row, one of two things is happening. Number one is the overhead resistance is getting weaker and weaker and weaker, and it's going to break with an explosion, which is what I believe to be true, particularly with the other bullish things we've been talking about with both Consensio and this formation in terms of the rising bottoms. The one thing I'm a little reluctant about is the fact that these lines don't come together for a long, long time. This is 2 years from now, which means that we could come all the way back down to this line and back up and back down and back up. And I don't want to be in a position where I'm buying in and then having to cut positions and back and forth. So I'm waiting to put clients into this very volatile but important asset class until I am firmly of the belief that this overhead resistance is behind us. If we happen to start a downtrend and turn all of the moving averages back down, I might be interested in playing a bounce off the bottom, which will be coming in something like 1230 or 1240 this time. I did not do it down here. We did do it, and then we got out as we came back down, and I'm not ready to get back in. So that is my first chart. I did want to, before I turn it over to Socrates to look at his thinking here, I wanted to take a quick look at the gold miners, which do not look particularly strong. This is the junior miners, GDXJ. I also wanted to look at the GDX, which are the bigger miners. It does not look all that good compared to what we just looked at with the gold chart. However, we do have what is shaping up to be an inverse head and shoulders. Not a great looking one, but one where we're right close to the neckline, and that would propel us up greatly, not to new highs, but up greatly. So I'm still watching that pretty closely. Silver is not looking good, regardless of how you look at it. It has not participated. It's much closer to its bottoms and its lows and closer to this setup trend line. And this big candle that looked awfully good has been completely reversed by this action today. which is also taking it below the long-term moving average and the short-term moving average. It's sitting right on the intermediate. So my view right now is gold is in its own world, and it looks very bullish. And with that, I'm going to get off of these charts.
Before
And
you do, let me ask you a couple questions.
you got it.
Could you pull back up the XAU chart?
Yeah.
All right. So I'm wondering what your thoughts are in terms of right now we're seeing the gold at a very interesting and crucial area. Is there anything that could happen in the stock market which would make you completely change your position? For example, if it really looks like the stock market has topped, or if it really looks like the stock market is going on to new all-time highs and you are wanting to be fully invested into the stock market, it would a bullish S&P mean that you're not as interested in gold, or would a correcting S&P make you more interested in getting in?
It's a great question. I don't have an answer for that because I think what is important here is the US dollar, and also not only the US dollar, which I will bring up now, which is on a weekly basis taking a pretty big drop. No damage has been done, except we did close below the long-term moving average and the short and the intermediate term. And that is a very unexpected move at the same time that we're seeing weakness in gold. I believe that this is still in a bull market. We did have a green 9 on the US dollar. That is 3 full weeks ago with this candle right here. So we've had basically a 1 to 4 candle pullback. And from that, we've got to see what's going to happen. If this keeps on heading down, I don't think the stock market is going to continue strong, but I do think that the gold market will continue strong. Is it possible for gold and the stock market to move together? And one thing I want to do is I'm going to go DXY. SPX. This is the dollar relative to the stock market, the dollar divided by the stock market. And it's a confusing picture. Why? Because this bear market in the dollar versus the stock market was because the stock market was so strong and the dollar was not as strong. This from 2018 to the current period is very interesting in that we are right where we started the period. Similar to what we've seen in the stock market, but this is far more volatile than the stock market itself. We never had this kind of a run in the stock market, even though we did fall from September of 2018 right here all the way to December 2018 in the stock market. The stock market fell sharply 20% from here to here, and the dollar was soaring relative to the stock market. But then look what happened here, where the stock market began its huge gains. The dollar divided by the stock market has come all the way back to the beginning of where it was. So I am a little unclear at this point of the relationship between the dollar and the stock market. So now what I'd like to do to try to answer your question is go back to gold, and we'll use the XAUs, and if it works, we will divide that by the SPX. And you've got almost the same chart as you did with the stock market and the dollar. So the only other thing to look at to see what is the odd man out here in terms of correlation is gold versus the dollar. And this is a little more interesting because it isn't setting up quite the way we've seen the other comparisons. What do I mean by that? This was the high in the stock market. And then from this point on, the stock market fell to December, which was right here. And since then, the stock market has sold off just in the last 4 or 5 weeks, whereas the gold stock market went through a big correction and then back up to the top. So we'd have to take a much longer look at the entire bull market with each of those comparisons to see how they're lining up, because gold did some very strange things back in 2008 and 9. And this relationship of gold to the dollar, gold divided by the dollar, peaked in 2012 and basically has dropped ever since, and it's gone flat. So I think it's too naive to make a simple statement that both gold and the stock market cannot go up together. I think it can. Or that the dollar and gold has to be inversely correlated. Now, I'm just going to look at a couple of other things that I've been looking at to try to get an idea of what's going on with commodities in general relative to the dollar. And this is lumber. And it's been in a horrible sell-off from 650 almost down to half of that since June of last year. And you've seen us talk about copper, and copper is somewhere in between, but clearly testing the lows as opposed to gold testing its highs. And those two are more similar to the silver chart. So we've got a lot of big cross currents between the commodities that are designated in dollars and dollars themselves, with gold acting as the strongest of all of them, which leads me to believe that gold story is telling us something about the bigger picture, which is the macroeconomic picture. I just, because we're doing this, want to bring up Bitcoin, which we will talk about in a bit. relative to gold. And I will just use the GLD because it's easier here. Maybe I won't. Maybe I'll use the XAU.
Yeah, I've been very interested in watching this pair myself, as gold has shown some signs that it might be leading Bitcoin, and at certain times it very much outperformed, and then now we are seeing gold gain it on back. So that is, I think that's a good chart showing that you need 6 ounces of gold to buy 1 Bitcoin. That sounds right.
Let's think about that for a second. Yeah, I guess that's correct. So this is Bitcoin versus gold. So we dropped all the way down to 2 after being up at 15. Yeah, that would be about right. Very interesting. Because I've got to do some work on this chart. I have not done it, but I'd like to analyze this chart from a hyperwave point of view. I can picture some things very similar, but it is almost. So if we were to come all the way back down on Bitcoin, yeah, they would cross. Interesting. Okay, so your question was too good. Unfortunately, it's too difficult to answer, other than to say that I think Bitcoin and gold are the 2 most important things to be looking at, with the stock market next and the dollar after that, in terms of making decisions for any one of those 4 individual parts.
Wow, I'm fascinated to hear you say that. I wouldn't have thought that Bitcoin would be a factor at all for making decisions in the stock market or the US dollar, let alone one of the most important factors. So that's very interesting.
Well, my thinking there has to do with the article that we wrote, The Long and Winding Road to $10 million Bitcoin, because in that, the one possible solution that I think is the best for the world situation is growing out of the problem. And the only thing we've got to measure that is US GDP in the US stock market. So to the extent that the stock market is weak, I can see gold and or Bitcoin doing well, not because it's running counter, but because it's becoming a possible or probable solution to the problem. I can imagine that if we break out to the upside of the stock market, big time, meaning running all the way up to the S&P another 25%, which is the target I've got in terms of breaking the inverse head and shoulder, that we would see weakness in either gold and or Bitcoin. If we don't see that, if we see the stock market messing around, then both Bitcoin and gold, I believe, have running room. And I think they're both proving that to us right now. So that's just speculation on my part. There's no historical data that we can use that is meaningful, because we've never been in this macroeconomic situation before with 4 or 5 possible solutions. So this is all new ground for all of us.
Yeah, very, very interesting. And I think that that's a very important topic that we should potentially explore more moving forward. I don't necessarily have the same perspective. In my mind, if the stock market is struggling, I have a really hard time seeing how Bitcoin could do well in that environment. If the stock market is struggling and pulling back, I would think that the world would enter a more of a risk-off environment, in which case they would not be wanting to hold something like Bitcoin, that they would be more flying for safety and selling stocks and getting into US dollar and maybe getting into some gold. But in that environment, I have a hard time seeing how there would be a lot of demand for Bitcoin from big money players in a bit of a risk-off environment. Whereas if the stock market is just crushing and really on a run and continues on a tear, well, now it's more of a risk-on environment, and people are more looking for alpha and more looking to better the returns, and they've been making a bunch of money hand over fist, so they're more confident to maybe toss 10 or 20% over here into Bitcoin or something like that. That to me is what would lead to bullish price action in crypto, is continued bullishness in the stock market, even though that's sort of counterintuitive to the value proposition of Bitcoin. That Bitcoin is supposed to be here for that sort of situation, but I just still think it's a little too early, and the market is still a little too immature for it to really be a valuable counter option in a risky environment. So that is definitely a very interesting topic that I think we'll have to explore more moving forward.
Absolutely. Yeah, do you want to pull up a gold chart?
Yeah, let's see here. There really isn't a whole lot for me to add in regards to gold. I think that you covered that really well. I've got a pretty messy chart here that's from a while ago. So this is something that I don't have a whole lot to add to, other than I am bullish due to the breakthrough of this trend line here that we can see a little more clearly on the weekly. So connecting closes with the top of that wick there, top of this wick here, broke through, and now we're supporting on a pullback and also supporting above the golden cross with the 50 and the 200 week moving average. Seeing this peter out right here opposed to creating a new local high sure makes me wonder about some exhaustion. So I will want to pull up my oscillators to get an idea of if this thing is maybe needing to cool down. The RSI is the first thing that I wanted to look at to see if it is creating a lower high, and that pretty much is what we're seeing. So giving us a bit of a bearish divergence here. We're on the weekly chart. This is, if you use the wicks, it did create a slight, it's like pretty much a double top here, we'll call that. So the top of this is getting back to this peak here, whereas the RSI is not. It is creating a lower high and rolling over. So that is something that is very interesting to me, which makes me think we probably will not make it through on this rally. Instead, we will probably get some sort of correction back down to the 1300 area. And then would also want to.
Would you mind just taking a look at the price on each of those weeks that you called a double top? Because yep. I do see a broadening top there if the most recent one is higher than the 3.
And this one is slightly higher by about $1.50, $2 or so. This candle here is higher. So if that gives us a 5, 4, 3, 2, 1, is that kind of what you're looking at?
Yeah.
Okay, that's definitely very interesting and something that I certainly had not spotted myself. So let's go ahead and draw that up real quickly, starting from backwards with the 5 down here. This candle right here is lower, that wick, so that qualifies as our 4. And then coming on up to the, we would go here for the 3. And then we have, let's see, I think I kind of like it down here a little better. I don't think it matters
I agree.
2, and then the 1 here. So yeah, that does look like that is a qualified setup. We've got this 5 here is above the 4, and I spoke too soon because this week hasn't closed yet here. So this wouldn't necessarily be a qualified setup until this week closes and does not have any higher high than this candle here.
Right.
So if this closes as it currently is, then it would be qualified with the lower high and the lower high. However, it is still too early. It's only Monday. There is still a very decent possibility that this breaks on through. And if at any point this even wicks above this candle, then we would have to start over and wait for another lower high on the following week.
Exactly.
So that is very interesting. Maybe I can zoom into the 3-day and see if one has already happened there. And it looks like this would be getting qualified a little bit sooner. I think Wednesday, this one will close. So potentially have a qualified setup on the 3-day on Wednesday, and the weekly would take until Friday. So definitely something to keep an eye on there. Broadening top at horizontal resistance is something that is certainly quite significant. So one other thing that I wanted to take a look at is the ADX, where you see that the average directional index, this black line, has started to roll up, and it looks like it's ready to challenge the 20 threshold. And then the plus DI and the negative DI are very interesting to me right now due to how far they are spread out. These tend to, they try to separate out the buying pressure from the selling pressure. And when you've got a big spread here, that indicates a lot of buying pressure and not near as much selling pressure. Selling pressure is decreasing, buying pressure is increasing. So that's something to me that is very important. The last time we got a spread like this was probably back in here, and that was a very bearish spread. So let's take a look at what the price action was doing there. Sure enough, it was selling off pretty darn hard. So this is something to keep an eye on. If the plus DI is above the negative DI, that indicates a bull trend. However, it needs to be confirmed by the ADX being greater than 20 or 25, whichever one you prefer. I'm good using 20, especially when it's a spread this significant. So right now, there's nothing being signaled since the ADX is below 20 and is saying that it's a trendless market, and therefore this can basically be disregarded. However, it will be confirmed, this buy signal that is represented by the ADX, the DIs will be confirmed by the ADX if it crosses 20. So if this thing crosses 20 here, and these are still significantly spread out in a bullish manner, that would indicate that a brand new bullish trend is just getting started. So if that occurs, if this is breaking through 20 as the price is breaking through the major area of horizontal resistance, that would be strong confirmation that a big trend is basically just getting started. So let's take a quick look at the daily to see if it already has signaled, and sure enough, it has. So what do we see right here? The plus DI crossed above the negative DI and spread out quickly. I mean, that's a huge, huge spread, showing tremendous buying pressure and decreasing selling pressure. However, when this happened, where was the ADX? It was down here at 12 to 13 or so, saying that you should wait for this to cross 20 for further confirmation that there actually is a trend. So the daily signaled a buy on the ADX up here on this candle right here at about 1335. That's when the ADX crossed 20 with these being spread out in a bullish manner. So that didn't necessarily work out too good. That was right at horizontal resistance. That's why you always are looking for multiple indicators and multiple areas of support and resistance, and not just using one thing blindly. So maybe you were able to avoid this ADX signal because you knew that this was significant resistance, but maybe you didn't. Maybe you went ahead and took that. That's quite all right. That's where I'm going to be keeping my eye on this to continue moving above 25. This is another good example of why some people will disregard until the ADX gets above 25 instead of 20. So this thing still being below 25 is another reason to maybe proceed with caution and wait for confirmation on the higher time frame. So we'll be very interested on that weekly ADX to see if this thing can cross 20 and the price can make its way through this 1370 area. And until then, over the last couple of weeks, what's been definitely intriguing me is some sort of long on gold and hedging that with a short on silver. And why I am interested in that is the moving averages on gold are all in a bullish posture. So we've got bullish moving averages on the weekly, the daily, and the 3-day recent golden crosses. So we're seeing that on gold, whereas silver is painting a different picture. So selling silver as a hedge to me makes a lot of sense because you're basically trading with the trend on both assets. The trend on silver is down. It's bearish as far as I'm concerned. We've got this death cross right here. We've got the 200-day EMA trending down. We've got these spreading out, and we've got this now acting as clean resistance on a throwback. So something like selling bounces on silver using these moving averages and hedging with longing gold, buying when it tests the bullish moving averages is something that's very intriguing to me. I really like setups where I can hedge my position and also have a realistic expectation of profiting on both positions. Being long gold and short silver is hedged, and it also gives me a realistic expectation to profit on both positions, and I can maintain that expectation as long as I'm trading with the trend and these moving averages are moving in the direction that my trade is positioned. So I said that I didn't have much to add, but I droned on there.
Great stuff.
So unless you have anything else to add, we can move right on and take a look at the Bitcoin.
Why don't we take a look at the stock market?
Yes, don't forget about that.
If you want to pull up charts, or I will.
I can pull one up, or if you would prefer yours.
Yeah, go ahead. We can take a look at that. I think everybody's seen both of ours enough, but
okay. So looking at daily candles here, do you want to zoom out to the weekly?
Go ahead and start with the daily, and then we can move up from there. We'll do it in reverse.
Okay. Sounds good. So really, what is most interesting to me right now is the 4-hour chart. I don't have a whole lot to say on the daily, so potentially we'll take a look at some other indicators, but I would like to start with the 4-hour chart here. And what has been, what was so interesting to me was seeing if we were going to get a death cross here. As you guys heard me say on Bitcoin yesterday, was that basically as long as these are in the 50 and the 200 EMAs are in a bullish crossover, then I have to stay bullish for my short-term bias. I use the 50 and the 200 EMAs on the 4-hour chart to determine my bias, whether I'm bullish or bearish. And often I will not be feeling the same way that the indicators and the charts are telling me to feel. So right in here, I was really thinking that we were going to break down. In fact, we did a video last week and I made a bit of a prediction that was it was premature. It was something that I should not have done before getting the signal from my moving averages. So what I said, we were down in here and we were below the EMAs, which had a bullish crossover. So I was expecting these up here to really act as if to really attract the price, to kind of act like a magnet. As long as these are in a bullish crossover and the price is below, the price just does not like doing that. And it really wants to revert to the mean and come back up and retest these areas. So what did I do? I predicted that it would come back up to that trend line and then it would find resistance. It would pull up and into a death cross with the 50 and the 200. This 50 was angling down sharply. The 200 had just started to roll over. We'd taken out lows. And I was expecting a bounce into this trend line and it would to be an ideal selling opportunity if these moving averages gave us a death cross right here. So these were the arrows that I drew. This is basically what I was expecting, and I was really feeling pretty confident that this thing was going to continue breaking down and come down and retest the 2600 area. But that didn't happen. And this is why I was premature. I should have only drawn this line. I should have waited on this thing. I should have waited to see what happens with these EMAs. Just because I really feel confident that they're going to cross, that's meaningless. I've got to wait and see what actually does happen. So we did get this bounce back up here to test it. I shouldn't have been expecting a pullback to the 2650 area unless these got a bearish cross. Instead, I should have been keeping a bullish disposition. I should have been saying that I am bullish short term and expecting this to continue its move as long as these are in a bullish posture. So I got ahead of myself and I really expected a breakdown, and that cost myself a really good entry. Not only potentially entering here, but could have entered here on a breakthrough of this trend line plus a close above this 200 EMA. Could have also entered in here on the close above the 50-day moving average with it starting to roll back up. So anything in here would have been really good long entries. Instead, I'm licking my chops at a short, and I'm really expecting, I'm like 80% thinking that this thing's breaking down. And when I'm that confident that something's going to happen, I am blind to the alternatives for the most part. So that's really what happened here. Was I was too confident in one direction. I wasn't flexible. I wasn't sticking to my system regardless of what I was thinking and feeling. And that's what is very important. Whenever you're trading, it's very important to stick with the process, stick with the system that you implement and that you have found success with, regardless of what your gut is telling you. Often the best entries will come when you don't want to do it. Like right here, I wasn't thinking about longing really at all. I was looking for a lot of fundamental reasons and a lot of technical reasons. I was not interested in longing at all. But if I just would have listened to my system and just stuck with my guns and executed how I should have, then I'd be in a position that's significantly in the green here. So that is an area where I did sort of make a mistake, but you know, it's something that didn't cost me anything because I didn't prematurely enter a short. That would be a big mistake that actually cost me money. Here, I just cost myself opportunity by not being, we'll call it in ready position. Think of a shortstop on a baseball diamond, down and ready for a line drive, ready for a grounder, ready to turn a double play, ready for anything. I wasn't in ready position here. Instead, I was more just expecting that what I see is going to happen. And that's always when the markets tend to spin you around and tend to leave you behind a little bit. So right here, based on these lower time frames, I have kind of missed my entry, and I am now wanting to be long, seeing that we did get back above these moving averages, not only on the 4 hour, but let's take a look. We looked at the daily yesterday, broke down the 200 and very quickly got back above the 50. Again, my entries were here, here, and here. So I've missed my entries. And now it looks like the market might be starting to leave me behind, especially if it keeps moving like this after the fundamental developments. I mean, look at this thing just taking off at like a 90-degree angle. So this is something where now it's up to me to decide, am I going to buy here? Even though I missed out, I didn't execute my buys when I should have. Am I going to just kind of FOMO in right here because it's moving away at such a quick rate? No, that's not what I'm going to do. I'm going to stay patient. If I don't have an entry and I miss out on a big move, that's fine. You have to be comfortable missing out on big moves. There's always another train coming. And if for some reason you missed out on your entry signals, and now the price is still moving in that direction, it is not time to just, oh, now I'm going to just jump right in. It's time to be patient and first of all say, you know, if I miss out and this thing leaves me behind, so be it. So be it. There will be another train coming and I will be in ready position for that one. So starting with that mindset, now we are not going to FOMO in and we're going to be patient. Now we can wait. And if we do get another signal, if price does pull back and gives us another entry signal, then I'll be in ready position to take that one. If that doesn't happen, then I'm going to be setting the next area of horizontal resistance that I want to be paying attention to, which would basically be the prior all-time high at the 2950 area. Between here and 2950, I'm just not interested in anything. I'm not interested in selling or buying. This is, for me, no man's land. If we pull back down into my moving averages, now I've got another opportunity to buy, and depending on what caused that pullback, how it's looking, how I'm feeling, then I might go ahead and take it then. Or I'm going to wait and see what happens if we can create a new all-time high and do it with conviction on high volume and sustain there, stay up there for a little bit of time. Now I would be interested in buying. That is basically how I am viewing it, is that right now I sort of missed out on my entry signals. The market's leaving me behind a little bit. So my two options are to be patient, wait and see if it pulls back and gives me another attractive entry here. And if that doesn't happen, wait and see what happens around the all-time high area. If it blasts through there and does it with conviction, then I will be in a position where I'm interested in buying again. So for me, it's a sit and wait, and those are the areas that I will be waiting for and watching closely.
Those are some great lessons for everybody, and recognizing what you have done and why and how you did it by making certain assumptions is one of the greatest lessons of all, as long as you recognize it, as Socrates just did. Something, as you were talking, popped up. If you could go back to the 4 hour.
Yep.
And I don't want to get ahead of ourselves because not too many people, not too many listeners have gone into much detail on the Selgin trading system, but I think I see a Selgin prime on this chart top. So maybe if you get rid of that last line that you've got drawn, see if you can start with a 7 at the last peak there. And
right here?
No, to the right. Yeah,
Here?
that one right there.
Okay.
And see if you can find a Selgin.
Yep, I think I see what you're looking
I
at.
think it's a full 7, which is called a Selgin prime. And I'd be interested with your short-term analysis. Now, I only use Selgin using weekly, but a number of people that attended our webinar have been looking at shorter-term moves, some of which I'm intrigued by. And that's why the only reason I bring this up here, because what a 7 or a 5 tells you is that this is ready to start moving in the opposite direction, which would be down. And that's so counterintuitive by the analysis that Socrates just gave us. I'd like to see how you are interpreting this. It's certainly closer to a top than it is a bottom, and having it occur below the last peak is fascinating to me. And what do you see there?
Yeah, I'm very intrigued by this, and mainly the first thing that really jumps out at me is how it's a bit of a fractal from the weekly chart. And if we're seeing the same sort of thing on higher time frames as we are on lower time frames, that is very interesting, and almost each pattern kind of validates each other, kind of in a sense that the whole market is moving in the same way on different time frames. That's something that is definitely very interesting. So I'm going to go ahead and get all of these up and going so we can see exactly what I'm talking about. And essentially, most people know what a fractal is, in the sense that it's the same exact pattern, just occurring on a higher or a lower time frame. And that is what we're seeing right here. And both are topping patterns, both are prime. So here, let's just start with the weekly. We've got this 7 right here, 6, 5, 4, 3, 2, 1. Each are lower lows, higher highs. And then on the 4-hour, we see what Tyler just caught, which is 7, 6, 5, 4, 3, 2, 1. So for me, that is very interesting, and yeah, it really makes me wonder. This 7, we will close here in about 34 minutes, so it looks like this should be qualified. Give it 34 more minutes, and as long as we close below 29.04 or so, then that should be qualified. And that is something that is very interesting. Like I said, if we do pull back from here, that could provide another entry based on my moving averages. But this wouldn't necessarily be me just having a gut feeling of wanting to pass because my gut tells me this thing is going down. Potentially, I would be looking to pass on this entry because I'm seeing broadening top inside of broadening top, and that makes me feel uncomfortable about wanting to buy coming off of this 7 and off of this 7. So that is very interesting and a very good catch.
Well, if you make that chart a little bit bigger so we can see the larger weekly.
Okay.
I just want to point out a couple of things. What's weird about this, and this happened in the NASDAQ also, it worried me more in the NASDAQ last year at the beginning of 2018 going into the summer. And the reason is because, and I said this was a broadening top. I didn't call it Selgin because at the time we hadn't made that public, but take a look at the 5 there. And what you see is a tremendous drop from 5 down to 6. And that's what I was worried about with that broadening top 1, 2, 3, 4, 5. We were all excited at 0.3 because we were hitting new highs. Everything looked great. Then we pulled down sharply to that 0.4, and people got really freaked out. And then we ran up, but then came almost all the way back down to 4 again in the next 8 weeks, and then all the way up to 5. And at 5, the market was saying, great, we've just had new all-time highs on the S&P 500. But I said I was a little bit nervous because this is also the completion of a broadening top. Now, we did get out of a great portion of the drop from 5 to 6, but we didn't do it based on a broadening top. It was in the back of my mind. We used Consensio to step out piece by piece until we were completely out when Consensio gave us a full sell signal. But now look what's happened. We've gone from 6 all the way to a new high 7. And most of you don't understand what that means. Socrates does, and those that attended the webinar know that that's called a Selgin prime. It's rare. But now we get a drop from that 7 that then forms a new fractal 1, 2, 3, 4, 5. And look what the 5 did. The 5, just like the previous 5, relative to the size of the position now, because we're only looking at a 4-hour on this one, that 5 was an enormous drop down to the 6. And now we have come all the way back up, and we've got another 7. And I had not seen that until we looked at these time frames. And I am happy at this point that we've only put 50% of the money in the market and 50% out. And I have not added to that on this run up. Something was gnawing at me that something was not looking quite right. Just as when Socrates on the 4-hour chart was sure that it was going down and made a mistake in not watching closely enough as it began to break above his expectations, I don't want to make that mistake by assuming that this 7 is going to immediately begin a big downturn, which will then be a continuation of the weekly downturn. And we don't need to go into all the details there. All I'm pointing out is I think caution is warranted at this point in the stock market. It's got to prove itself, and now it's got a couple of stumbling blocks in front of it.
Absolutely. Very interesting. Something I just noticed I hadn't seen before is this candle here that we had just closed. Look at that, engulfing the body of the prior 3 candles, almost getting all of that candle. That's very interesting. And that just came on not really any sort of good news development. Just kind of came out of nowhere, this thing that blasted right through that area of resistance that I was looking at.
Yeah.
That's very interesting. All right. Well, we are an hour in. Let's
take a quick look at Bitcoin. We promised we would do that, and there has been some fireworks since yesterday. And I'm going to let Socrates handle this one because he called it yesterday perfectly. But why don't you explain how and why you did that?
Yeah, absolutely. So had this area of horizontal support that has been drawn for the last week or so, and this area of horizontal resistance, which has been in line with my moving averages. So yesterday, as we were recording, this candle had just closed, and I was very interested to see that this wicked down and closed above the 200 EMA. And then this candle immediately opened and was dumping. The full candle was below this 200 EMA, and it looked like it was going to challenge the lows of this candle. So I was definitely in a situation where I wasn't necessarily very confident in either direction. So I was looking at multiple sort of likely outcomes. And the most likely outcome I was thinking was going to be breaking down this area of support. We had broken down the trend line. We had resisted. Basically, I was looking at something very similar that we saw with the stock market, in the sense that I was expecting a bounce up and into the top of the channel and then resistance from there. And yet again, often when I'm drawing these lines, I'm just trying to help myself get an idea for what I am expecting. And now that I'm doing these shows, I'm wanting to be very careful about making a projection versus actually something that I think is going to happen. When I really think something's going to happen, I'm going to be making a trade and entering some money, versus when I'm just making a projection, I'm just looking at what the moving averages and the trend lines are telling me, and I'm sort of trying to prepare myself for the next good entry, essentially. And what I was really thinking was the next best entry that I could see was going to be some sort of pullback to retest the bottom of this channel. I was looking at a bounce from here, from the 200, resist this 50 that had rolled over and was in line with the horizontal resistance and the top of this channel with this trend line. So I was expecting a bounce here, resistance here to lead to a breakdown to retest. That line was drawn a little incorrectly. I was looking at 6,800 as the area to retest and the area where I was very interested in buying. So this is what I was thinking was the most likely, and it was really what I was wanting. I was wanting to buy Bitcoin in this area. However, I did do a good job in this situation of trusting in my trading system and kind of being in ready position. Like I talked about falling short in the stock market, I did do a good job here in the sense that, if you remember back in here, we did a vlog that was on the 19th of, on the 4th of June. I mentioned that I had bought this 200 EMA, but I didn't necessarily think that it was going to hold. I was feeling like this correction was going to continue, but regardless of that feeling, I went ahead and I trusted my system and I bought this long EMA retest. And then I was right in here talking about yesterday how this really is a bit, can be a bit of a buy signal, seeing the price below these EMAs that are in a bullish crossover. I mentioned how that really does look like a buy signal, even though I'm not necessarily wanting to add at this point. I was really most interested in adding down here, but I mentioned how this is going to be acting like a magnet. It's going to be attracting the price. As long as price is below and these are in a bullish cross, the price is going to be attracted back up into here. So I gave an alternative scenario for if this area of support does hold, what I'm expecting to see. And that was a retest of this 50. I think I put it in dashed lines to just show it as an alternative perspective. And then a pulled back one more test of this before taking off and breaking through. If it would let me draw that. Thank you. Okay. So that was the alternative sort of projection that I had. This was the other area that I wanted to be ready for, was a break of this trend line here that it can be drawn a couple different ways. So if we broke through there, and then I was thinking the 50 could hold up as resistance one more time. Generally, I'm used to seeing two touches of this 50, 2 times it acts as resistance while these squeeze. So seeing these still kind of spread out, that tells me, it makes me picture the Bollinger Bands that are probably needing to squeeze a little bit more. And seeing this second test of this 50 EMA tells me that the price is most likely going to come back for one more test of this 200 EMA while this continues to squeeze, and this EMA moves something like that while the price continues to consolidate below the 50 and above the 200. This is moving up and this is moving down. That's a squeeze. That's, in my mind, that's kind of the same thing as a Bollinger Band squeeze, is when these get really tight, the 50 and the 200, then a big move is expected one way or the other. When the price is squeezed in between two longer term EMAs, that tells me the consolidation has moved towards completion and that a big move is on the horizon. And you don't necessarily want to be overly confident in which direction that big move is going to come. However, I always do lean towards which way the moving averages are. So if this squeezes like this right in here, we resist the 50, come back and test the 200 one more time, throw back to retest the top of this channel, I would be inclined to stay bullish because these are in a bullish crossover, and I would be most expecting a bullish continuation and would probably be very interested in adding right around here. And then if that does get the death cross, I'm going to be exiting very close from like 76 down here, about 74 or so. If these are squeezed sufficiently, then that means that the price can't really go far down without that getting the death cross, and then I'd be out right away. So that is a good representation of where I did take an entry, even though I wasn't necessarily feeling like it was a great time to do it. And then also where I did a good job here of being ready for multiple outcomes. And now since this didn't happen, I was ready to buy right here at 68 if this broke down. Since that didn't, now I am preparing right in here on another retest of this area. And if that doesn't happen, breaking through this 50, that's also a buy signal for me. So if we do break back above this and have this roll up, that could be another signal to add. And seeing this support hold strong makes me interested in the buy signals that come about here moving forward. So still in a situation where I don't want to necessarily be doing anything right here. I want to be sitting back and waiting and watching how well this 50 is acting as resistance. That's wicking down below, wicking down below. It tried to close above and it did, and it instantly reacted, coming back down below. So that is holding up and working well. Time to watch, wait and see what happens if we pull back to this 76.50 area. I think there will be a lot of demand, and I don't think the price would stay there very long. And that's an area where I'm going to be prepared in ready position to add on to my position.
That's great stuff. And if you just keep that up for just a second longer, we've got another fractal working here. If you just go out a little bit bigger on the chart, there you go. A little smaller. I just want to show the head and shoulders that you talked about yesterday, which is fairly obvious to me. But now we are working on a smaller head and shoulders. And that will require that we keep going down from here, back down to the neckline, which is also the long-term EMA on this chart. Now, just as we saw the Selgin weekly and the throwing off a Selgin 4-hour, what's called a prime, a 7 count, here we've got a big head and shoulders that has a target of 5,900 approximately by our rough calculation yesterday. But what's interesting about this smaller one that is developing and looks very similar to the bigger one is that it doesn't have much of a target because it's a little tiny thing. However, that target gets you down below all the support that Socrates is talking about. So what I mean by that is sometimes by zooming in and out at various time frames, you can pick up some clues that you shouldn't take as gospel, but you should put it on your checklist of possible options of things that could happen. And this could happen very quickly. Just as 4 candles ago on this chart, we had a huge green up candle, we can get a huge red down candle very quickly, and we're right back into the support area. But more importantly, I think you have just formed this fractal head and shoulders that if it breaks, then breaks the bigger head and shoulders, and then you can get a snowballing effect. And you see this often with a number of different patterns. If you're, you've just got to keep your mind open to possibilities. Yes, you can overload the system with too many possibilities, and unless you've seen many of them over a long period of time, a lot of it seems like gibberish. I understand that. It is not gibberish, and it can be very helpful in making decisions. So we've covered a lot. We've taken 15 more minutes than we thought, but we went over the gold market looking very interesting, the US stock market looking very interesting, and Bitcoin, all of which seem to be at some very important crossroads. And with that, unless Socrates has got anything to add, that's all I've got.
That's all I've got. It's a pleasure chatting with you, and I will look forward to watching how these markets develop. They are very interesting, and it gives us lots to talk about. So nothing to complain about. All good.
And this is a great classroom. I mean, for all of us, when markets do the kind of things we are seeing, yeah, you're going to make mistakes. If you've got money management and stop losses, and you know what the options are, you should be able to control the risk. And we haven't seen the reward side of these equations yet. Those that jumped on prematurely into the Bitcoin and crypto market, they don't believe they did, but I do believe they did very well, because it's such a volatile market. But we haven't begun the big kahuna at this point. We don't have evidence that we have begun the big kahuna. We don't have evidence that we are going to break out to the upside on gold. And we don't have evidence that the US stock market is going to break up or down. And because of that, this is a laboratory in which each of you as listeners can and should be learning and thinking and experimenting, just using the principles, hopefully, that we've been teaching for the last 18 months, not in making money on this trade or that trade, but that there are basic principles that if you use those principles, no matter how difficult the situation is, you can find yourself in very good stead. Thank you very much, Socrates. Thank you all, and we will we probably won't be talking tomorrow, but we might make some other arrangement. I will be on the road. Nope, not tomorrow, the next day. Anyway, we will try to continue this on a daily basis. Thank you very much.
Excellent. Thank you. And I'll have you end the broadcast today.
Okay, very good. Adios, amigos.